Ever wondered about the current inflation rates of the world's largest economies? Well, buckle up as we delve into this complex world of numbers and percentages that shape our global financial landscape. Inflation, the rate at which the general level of prices for goods and services is rising, has surged globally, causing economic pessimism and weakened buying power. This surge has been felt across the globe, from the towering skyscrapers of New York to the bustling markets of Tokyo. Let's take a trip to Canada first. The Bank of Canada, in a bold move, raised its interest rates by 100 basis points, the largest increase among advanced economies in the current policy tightening cycle. Concerns about higher and more persistent inflation were the driving force behind this decision. A similar trend is seen with the Reserve Bank of New Zealand, which also raised its rates by 50 basis points. Moving across the Atlantic, we find the United Kingdom wrestling with significant inflationary pressures. Factors such as severed trade relations with the European Union and reliance on Russian energy have compounded the UK's inflation woes. Economists predict that the UK's inflation rate will surpass 18% in early 2023, driven by higher natural gas prices. In the United States, the situation is slightly better. Despite facing high inflation rates, the US is faring relatively better in its fight against soaring prices compared to its peers in the G7 countries. Now, let's turn our gaze towards the east. In China, the People's Bank of China has cut its reserve requirement ratio by 50 basis points, injecting 1 trillion yuan into the economy. This move marks a shift from countercyclical tightening to an easing bias as China faces challenges from the COVID-19 resurgence, supply chain disruptions, and moderation in domestic consumption. In summary, inflation rates are surging globally, with different countries adopting different strategies to combat this economic challenge. While some are raising interest rates, others are injecting funds into the economy to stimulate growth. The impacts of these inflation rates are far-reaching, affecting everything from the price of your morning coffee to the value of your savings. These are indeed interesting times in the world of global finance. The world's largest economies continue to navigate the choppy waters of inflation, with each decision impacting not just their national economies, but the global economic landscape as well. As we move forward, it remains to be seen how these inflation rates will evolve and how these economies will adapt to these changes.